Good morning, bootcamp members. It is the 11th of April, and it is day one. So I want to thank you guys for, first of all, signing up for the bootcamp. I know the official start date isn't until June 1st, but for you early birds, this gives us a chance to get a total of about 20 plus weeks of work together, and I think that is awesome. So before we kind of jump into the charts here and go over what I'm looking at this morning, which is something that we're going to do on a daily basis together as a team, I first want to kind of jump into the breakdown of what you guys can expect here in terms of layout of the bootcamp, daily features, as well as the things we'll be covering as a team. So as you guys know, the official start date will be on June 1st, but we're going to really kick off today for you early birds. Next week, we're going to start doing our twice-a-week webinars. They're going to be recorded for those of you who work and can't attend it live, so no sweat off your back, guys. You will not miss anything at all. We'll be beginning the live trading where you guys can see my screen, hear me speak, see what I'm looking at, see how I'm operating. We're going to begin that the week of 4/23, so that is about 2 weeks from now, I believe. And one thing I want to mention to you guys is that each of you who has signed up for the bootcamp, you are more than entitled to do some free one-on-one mentoring sessions with me. We can Skype, do a Google Hangout over the phone, and kind of work on a few things that you may think that you need some help on individually. So when you guys see this video, that's something that interests you, just shoot me an email, shoot me a text, and we will set that up. And again, that's free of charge, guys. That's on me. As far as the curriculum, guys, we're going to cover a shitload of things, but the core things to give you guys an idea of what we're going to be talking about and covering this summer. Going to focus a lot on supply and demand. We're going to focus on reading the charts like a pro and not getting caught up in the exact pattern, but rather seeing the big picture and tying that in with volume. We are going to focus on sector analysis, which is one of the main ways I find my opportunities throughout the year. We're going to work on perfecting your entries and exits based upon volume, which I mentioned beforehand, and we're going to go very deep into volume, guys. For those of you who don't know what I mean by volume, that is simply a measurement of how much money is entering or exiting a stock. I have a belief that it's an entire game of supply and demand. Therefore, when the demand for a stock rises, therefore the price does as well. So that's something we're going to jump into very deep as a team. We're also going to discuss the basics of options trading. Now, options can be incredibly complicated on the surface. There are many layers, many things to figure out. I trade options in the most simplest form, guys. I'm looking to swing to the upside or the downside, just like you would if you're buying, the common shares of a stock. The only thing that's different for me now is an options trader is that when I go pull the trigger to take my entry on the trade, I'm buying a much more leveraged asset in the option rather than the stock. So something we'll discuss, guys, complicated on the surface, but you break it down to a few key things that you need to understand, and it's gravy. We're going to talk a lot about risk management, the daily habits of a full-time trader. We're going to spend a lot of time, a lot of webinars, guys, on the mental game, learning to control human nature, control your emotions. That's huge. We're also going to dive into what I call the follow the money strategy, which is what I've been using for the past 12 months or so with phenomenal results. It's, again, just a strategy that is based entirely around supply and demand and volume. We're going to discuss a little bit, guys, about taxes. That's something that I've gotten some questions about this year, and I think it would be valuable to spend, at least a few hours out of the 20 weeks talking about how you're likely to be taxed as a trader and how to handle that. Quick little preview, you can't avoid them, so that sucks. And we're also going to talk about income streams. For those of you who aspire to be a full-time trader, understand that it's a beautiful life. You have freedom, you're opening yourself to huge financial potential, but early on in your trading, it can make the game a lot easier if you can kind of figure out some, nothing huge, but additional income streams to kind of keep money flowing in. So those are the things we'll be discussing, guys, along with a lot more. But again, please, let's do some one-on-one sessions. If you're interested, hit me up. I think it'll be very valuable to you guys to work one-on-one as we head into the summer here. So with all that being said, guys, let's jump right into the charts. This is something I do every morning. So right now it is 6 o'clock in the morning my time, and this is something I do every day. So got a look here at the S&P 500. And it looks like we are set to open a little bit lower this morning, down over 0.5 percentage point. And what we got here, guys, is this, after this messy price action, what I'm going to expect is that we just kind of trade in the sideways range maybe for a few weeks, and then we'll figure out, which direction the market is going to head next. But after all this choppy price action, it's very likely that there's going to be some sort of pause. People kind of get their bearings, figure out where we're going to head next. Take a look at Tech, QQQ, and these two guys, the SPY and the Qs, they're very much tied together. So with the SPY being down today, the Qs are as well. And again, we've had some very violent chop on some pretty crappy volume, and now, I think we're going to go sideways. So very important to keep in mind, guys, in a choppy market environment, you need to be very careful of, where you're placing your bets. A lot of people have been so hung up on these tech names, so we look here at XLK, which is the technology sector. And again, not much going on. Within this whole range, there have been thousands of dollars of losses taken just by Focus Trades members alone. And it really strives on the unwillingness to not trade. And that's something we're going to work on as a group. There are simply times where you need to step up to the plate, come in with size, and get the hell out. And there are times where you really should not be participating. And that's something we're going to work on as a team. And it's my hope that when you guys see the power of options, and you see what's possible in a truly proper environment, you're going to have no interest playing around here in this mess. But we still need to have, trade opportunities despite the market, being all over the place for the entirety of this year so far. So something we're going to focus on, guys, which I mentioned before, is sector analysis. And for newer traders, a sector is just simply, in plain English, a family of stocks. So the ticker for the technology sector is XLK. So XLK, guys, is the technology sector. And here's how these ETFs work. An ETF is an exchange-traded fund. When you buy a share of XLK, it is weighted of various technology stocks. So, again, to put this in simple terms, for those of you who may not know, all that means is that when you buy a share of XLK, you are getting, and this isn't exact math, but you are getting, a tenth of a share of Apple, a tenth of a share of Google, a tenth of a share of Amazon. So they're weighted. They are made up of many different individual stocks in that given sector. So XLK is the tech sector. You've got XLF, the financial sector. So, the financial sector, you buy a share of this, guys, you're indirectly buying a share of a Goldman Sachs, Bank of America, Morgan Stanley, things of that nature. XLE is the energy sector, and, we can go so on and so on. The reason that I believe it's important to start with this sector, guys, is that it's a game of supply and demand. As small traders, we do not and never will have enough capital to make prices move. However, the guys on Wall Street with their multi-billion, trillion-dollar hedge funds, they're the ones who can make these truly, potentially life-changing moves take place. So, just for a quick example, guys, this is one of my bigger trades of 2017, and it came from sector analysis. So, something I do every single day. Sorry, my charts are being wacky here. Something I do every single day, guys, on a daily basis, is monitor this pack of charts here, and these are all the major sectors. And we're going to jump into this in greater detail, but just for a quick overview this morning, what I like to do is watch these every day and try to identify the sector that is seeing the largest increase in volume. So we go back here to XLF. This was an opportunity I was able to identify going back in November. Had XLF was going sideways, guys, very, very quiet on super low volume. Situations like that, where a major sector or a major stock is going sideways on low volume, I want you to imagine that like a rubber band. It's being pulled and pulled and pulled. There's a lot of energy being stored up in here that needs to release to either the upside or the downside. So part one for us, guys, is to identify periods of what are called consolidation like this. And it's a bonus if during that consolidation, there's no one home on the volume. The reason I call my strategy follow the money, guys, is that when I see a demand begin to increase for any given stock, sector, or asset, I like to follow, because again, it's my belief that it's a game of supply and demand. When you see demand coming in the form of increased buying volume, that's typically your move to kick off. So I was able to identify this last year, guys, simply based upon it going from dead volume to multiple very large increases in volume, and it kicked off a beautiful move in XLF. And this was a week where I was able to profit about $20,000 in a few days on not an insane position size. For those of you who are new to options, a move like this, from here to here, you're probably talking with 300 to 400%. So $100 investment goes to $300-400 of profit. $1,000 turns into $3,000-4,000 of profit. $10,000 risk turns into $30,000-40,000. And this was taking place, guys, over the period of a few weeks or so. Now, you catch the entirety of this move, and it changes your life. This is a situation where you're talking maybe 1,000% return. So $1,000 turns into $10,000 plus. $10,000 turns into $100,000 plus. Now, don't be discouraged if you don't have capital like that, guys. Just understand the insane potential. The point from where you are now to the point, of having enough capital to make some crazy things happen with options is not very far. Again, $1,000, you may not have that in your account now, guys, but it does not take much to get to that level. It's not a pipe dream and not blowing smoke up your ass. It's a very obtainable thing to do if you're not there already. And again, there's a few times a year where these big moves driven by huge increases in demand, where you can turn $1,000 into 10. It's not every day, it's not every week, every month. But again, guys, you need a few of those a year to make a huge difference. Plus everything that we catch in between. And the reason that sector analysis can be so useful, guys, is that everything moves in a pack. So here's a chart for XLF. Now let's look at the chart for a few big-time financial stocks. And remember this pattern. Had a consolidation over here, beautiful leg up, sideways, and another beautiful leg up. So let's take a look at Bank of America. Same exact pattern, guys. Consolidating a no volume, huge increase, shot up, sideways, and shot up. Take a look at another financial stock, Goldman Sachs. That ain't it. Same thing, guys. Consolidation, the volume came in and moved higher. So the reason that that's important is that something a lot of traders ask daily, what stocks do I trade? How do I find opportunities? Where do I look? Because these sectors are weighted, guys, of individual stocks, if you see volume going into any given sector, an increase in demand heading into any sector, by default, the stocks that make up that sector are going to move higher as well. Here's a move in energy last year, big time move on increased volume. Let's take a look at something like a Chevron, an energy stock. Made a beautiful move. Maybe something like even a smaller name, really unheard of energy stock, EOG. Big time move. So again, guys, sector analysis can be very useful from the standpoint of, hey, what kind of stock should I be trading? Where should I be looking for opportunities? And the best part about it is that's something that takes about 5 minutes of effort every day. Once you learn to have your setup like this, guys, and you don't have to have it set up exactly like this, but when you start to take the view of, where is money flowing in the individual sectors, that helps you quickly narrow down, which stocks am I looking to trade here. And having this view is going to keep you out of a lot of trouble. What a lot of traders unknowingly do is they'll try going long a tech stock when tech is getting its ass kicked. This is all higher level thinking and trading, guys, and it's a way that a lot of people on the smaller level don't think. So just by virtue of us spending so much time together, we're going to get you guys on this higher level of thinking and seeing the big picture. But in terms of what I'm interested in for today, guys, it looks like we're a bit red here at the open, so things could be a bit choppy. But going back to sector analysis, the strongest sector over the past few weeks by far has been energy. When the markets are getting its ass kicked, energy has been able to trade here sideways in this nice range. And a lot of focus trades members have been able to pick up some nice profits from these little swings in here. But finally getting that volume coming in, it made a 10th breakout of this squeeze range yesterday, and it was a good day for many, energy names as well. Chevron had a big day yesterday. again, guys, they move as a pack. So, you know, I took a position yesterday in HP, which is American Pain, an energy stock. And the reason I chose this one out of any other energy stock was simply the volume. So here's a 65-minute chart, guys. You know, that's what I like to see, just continued volume plowing in all day. Now, you know, we are down here about 0.5%, so this position could take somewhat of a hit this morning, but still safe in this consolidation, and it's also 6 o'clock in the morning, so a lot can change in 3.5 hours before we open. But that's what I'm interested in today, guys. You know, where's the money going? Where's the money flowing? And like I said, that's something we're going to work on as a team as we kick off here. So I will be much more active in the group chat as we're now kicking off, guys. If you would like, you are more than welcome to shut off the notifications and group me. That way I'm not blowing up your phone all day long, but I am going to be active in there, sharing thoughts and setups and trades with you guys kicking off today. So I'm looking forward to that. And as for the next 20 weeks, guys, I'm very excited. I think we're going to make some good profits together, and I think even more importantly, we're going to make some great progress in each of your individual trading. So I thank you guys again for putting your trust in me. I won't let you down, and I'm looking forward to working with you all.